Saving for a home purchase in Oregon may earn you a tax break. In this video, I'll fill you in on Oregon's little known but really cool First-Time Homebuyer Savings Account program. If you qualify, you can claim a state income tax write-off on the money you save to buy a home. And you gotta save a down payment anyway, so you may as well get some tax savings, right? To qualify, you have to be a first-time home buyer and a resident of Oregon. And to get started, you open up a dedicated account at a bank or a credit union. And this account can be in just your name or joint, so long as you file joint taxes with the other account holder. And time is of the essence. You have to open your account before December 2026. Once open, you'll have up to 10 years to save for your home purchase. Your annual tax write-off is capped at $5,000 per person. So $5,000 annually if you're single, or $10,000 annually if you're filing a joint tax return. And as your account grows, the interest on your account on up to $50,000 is tax-free as well. Although the annual write-off is capped, there is not a limit to the amount you're allowed to save and deposit into the account, and it is actually permitted for other people to make deposits on your behalf. So if a generous family member or friend wants to help out, they can. If you're getting hitched, I think it's kind of a cool idea to set up a first-time homebuyer savings account instead of a traditional wedding registry. Kicking in on a home purchase could make a pretty amazing wedding gift. But as a tip, only funds you deposit into the account qualify for a tax deduction. So you might want to have any friends or loved ones give funds to you to deposit into the account so that you can secure that tax write-off. When you're ready to start your house hunt, your savings can be used toward pretty much any expense related to buying your home. Down payment, closing cost, real estate brokerage fees, you name it. You do, of course, have to buy a home in Oregon, and the funds can go toward the purchase of a house, a condo, a townhome, a manufactured home, or a trailer, and existing homes and new construction are both allowed. And here's a fun fact to keep in mind. There is no minimum amount of time that the funds need to sit in this dedicated savings account. So if you've already saved up for your down payment and you're bummed out that you missed the boat, you didn't entirely. Open an account, run some of your existing savings through it before your home purchase, and you'll create a little bonus tax benefit. The only real limitation to keep in mind is that there is an income restriction. You'll qualify for the maximum benefits if your federal adjusted gross income is no more than $104,000 if you're filing single, or $149,000 if you file jointly. Above that amount, the benefit gradually phases out and it drops to zero at $131,000 of income for single filers and $187,000 for joint filers. And you want to remember that your adjusted gross income is your income after your contributions to a 401k or a 403b or other deferred comp program. If you're close to the income limit, take a look at where you're going to land for adjusted gross income, and you may want to consider bumping up your retirement savings so that you can take full advantage of the program. Oregon is one of just a handful of states that offer programs like this, and it honestly offers one of the most generous terms of all of them. The other states on the bandwagon are Alabama, Colorado, Iowa, Michigan, Minnesota, Missouri, Mississippi, Montana, I think that's all the M's, and Virginia. The details of each vary, and if you're curious about another state, comment below, and I'd be happy to make another video with all the details. And while you're clicking around down there, please like and subscribe, and click the link to schedule a call. I'd be happy to help you plan the purchase of your first home.